is really now being called the Fintech laboratory of the world, and a large part of the credit is to some of the people on the stage. Sohini, especially you, I mean, 20 billion UPI transactions a month, that's almost 8 lakh every second. I mean, no other country in the world is moving money at this scale, but the industry is also maturing, you know, whether that's fintech, wealth tech, insurance tech, payments. Now the question really is that you've blitzscaled the industry. How can you make it profitable and how can you make it sustainable? So that is a question really that we want to tackle here on this panel. And for that, ladies and gentlemen, a very warm welcome and thank you so much for being here. But Sohini, let me start by asking you something that I've heard from quite a few fintech founders out there. The real innovation when it comes to payments has not really come from one of the players in the industry. It's been done by NPCI. Do you at some point worry that the dominance that NPCI has in the payments market could be crowding out some of the private innovation? And some of them do say it behind closed doors.
That's a very interesting take, I would say, Ritu. Let's step back a little bit. And it was, I would say, extremely gratifying. I would almost feel a little smug to listen to the number of times UPI was mentioned just today, right? We are on a banking transformation summit, but and UPI becomes I would say, the brand. It is NPCI which has brought UPI and a lot of other solutions. And yes, rightly, it has transformed the entire way India transacts. It is not just the world's largest real-time payment system, it is actually also the most inclusive real-time payment systems. There are many countries, more than 60, 65 countries that have real-time payment systems. We're not the first, but we've become the largest. And I don't think it has become, I think it would be a misnomer to say that that's because NPCI came out with some innovation. I think it is because of the way, it's everything when you look at right from the way the regulatory frameworks are. We came up with the framework, the technology, and the open standards. But all of the innovation has actually been built on top of that by banks, by fintechs, by third-party application providers. So we provide the railroad, but the real customer experience and the reason it goes from like nothing 9 years ago to more than 700 million transactions a day today is because of that layer that's been built on top of it.
Well, sometimes you worry if these rails are really going to take away the moat, for some of these fintechs. But that aside, quickly before I move on to the others, what is the next big innovation? I think that's something we all really want to know from NPCI. You've done UPI, you've done FASTag, you've done Bharat Bill Payment Systems and countless other things. What next do you think that will really change the way credit is seen in India?
I think that's a good segue, keeping in mind what we are talking about today, like the theme of this event itself, right? So when you look at any the entire pyramid of financial services, yes, payments is at the foundation, right? But that payment itself and the fact that we've moved, many years ago when I used to run cards and payments at a bank, I think there was this one classic fact that would be there in any presentation, which was only 3% of India's PCE is digital, rest everything is cash. I think that's been turned on its head, right? Today, majority of the transactions happen on digital. And what does that do? You talked about the moat. What that does is actually build the foundation for the next revolution, which is going to be the credit revolution. And we heard the DG speak about all of the frameworks, the regulations, everything else, the enabling structure that is coming around. I think what's going to happen, and innovation is not just an event, it's going to be built on top of UPI. A few years ago when we launched credit cards on UPI, what that did to the ecosystem was, from only about 10 million odd point of sale terminals, today, on a monthly basis, credit cards get used at more than 25 million points of sale which are UPI enabled.
That is a huge jump from 10 million to 25 million points of sale in a matter of months.
Yes. So this is the 10 million points of sale which exist. Over and above that, so if you had only issued credit cards which can be used at point of sale in the traditional acceptance architecture or framework, that's it. You can issue one card, the same bank can issue 5 cards, 10 cards, but you're not really moving the needle. When we issued CC on credit card on UPI, that's been a huge, huge jump. And I think credit cards is, again, still there are about 111 million credit cards in this country. It's one form of credit, but I think we are going to be taking this to the next level of discoverability and delivery of credit. So when banks are able to, or fintechs are able to use all of those frameworks and the AI to decide that I can now offer credit, imagine it being discoverable at the point of sale, at a QR code, at the moment of truth for the customer whom you want to give responsible credit to.
Yeah.
And I think that's the direction we are headed.
Well, I'm very excited to hear all of this, but I want to ask Rishi at Visa what he makes of some of these innovations that NPCI is coming up with. With UPI, payments is virtually free. As a card company, how do you feel about your moat in the current environment? I know you're going to say you're not just plastic, you're a technology company, but tell us how zero UPI, credit on UPI, how has this impacted your business and its profitability?
I think you've already spoken for me, but just on a very serious note, I think we applaud everything that NPCI and UPI have done. I think it's been fantastic. If you think of the digital inclusion, everything that Sohini spoke about, the touch points and so on and so forth has been great for India and Bharat, right? There's no two ways about that. I think as you speak about the moat that Visa has, I'll just take a step back, right? Visa's been around globally for 6 decades plus, right? In India, 4 decades and more, right? And there's a reason that Visa's been around. The security, the safety, the convenience that Visa provides to all cardholders and all its users globally stands true even today, right? Whether I use it for a point-of-sale purchase that Sohini spoke about, or an online purchase, a cross-border transaction, or any kind of experiences and benefits that I want as a cardholder, Visa provides that today. So our belief is, A, we're very, very committed to being in India, extremely committed to doing more innovative stuff, whether that is in the agentic AI world, on the fraud detection side, making sure that everything we do is for safety, security of the consumer. If you think about tokenization and how we led the mandate with the RBI, who was very progressive about tokenization of card credentials online, today we have over 400 million card credentials tokenized online, right? So call it the bedrock or the infrastructure for all payments that happen online. We are very much working on that, leading the charge on that. So having said that, between consumer experiences, online experiences, point-of-sale experiences, fraud detection, preventing and making sure that everything the consumer touches and feels is safe and secure, it's the moat that we believe in and we are here for.
So you don't think cards are going away anywhere? I mean, the penetration, of course, it remains very low, but is it being replaced by other forms of payment?
No. So that's a great question. You know, the last RBI data, if you look at, card payment grew 15% year on year, even as recently as May, June this year, right? So cards are not going anywhere. The number of plastics still exists in the market. We have more than 1 billion debit cards, over 100 million credit cards out there. The consumers have choices today. Consumers like you, me, everybody else have choices, which is fantastic. Maybe choices that we didn't have a decade ago. We have them now. And our needs are changing. How I want to spend online, how I want to spend at a physical retailer, how I want to spend internationally when I go travel for a concert. I'll just give you a small snippet of this. Coldplay was performing in Abu Dhabi earlier this year, right? Yeah. We saw a big spike in data and usage of Visa when people travel for concerts like that. Yeah. As recently as this weekend, we had a concert of Vishal Shekhar in Mumbai and Delhi. And we just saw the spend patterns of users when things like this happen, right? So consumers want the choice, want the convenience, and it's so amazing that everybody today has those choices. Till the time it's safe and secure, and it's a world of digital inclusion, going with financial literacy, I think the cards are not going away anywhere.
Virtually, a few years back when 11 payment licenses were given to payment banks, we saw very few survive this sort of payment business model because you can't lend, and credit is where the lenders make money. I want to understand what really got you to survive and how you've been able to get to this billion transactions, 100 million monthly users. That sounds very, too good to be true. Just tell us what you've done differently in a model that is so constrained by regulation to survive and thrive.
I think let me first join the dots of what Sohini mentioned and what Rishi mentioned, and just let me point out something for the audience. If we just look at the data points which are being mentioned by Sohini and Rishi, we can just aggregate them into something called Digital India. 2000 to 2010, India doubled in terms of GDP. Digital India actually just doubled as well. 2010 to 2020, Digital India actually grew 8x. 2020 onwards, Digital India has actually grew 10x, which basically means Digital India's reached escape velocity, and payment banks are actually custom made to ride on the roads of Digital India, which has been built so well by Sohini and NPCI. And we are just actually now on the point of that escape velocity of scale. Let me make this point a little bit more sharper. As fintech companies are riding on the wave of scale, what happens on the consumer market is that second order needs start emerging. Initially in scale markets, consumers really start purchasing commodity products. Rishi mentioned 1 billion debit cards. It's really a commodity product. Everybody has a debit card. They just start using it for withdrawing cash from an ATM. Everybody has a bank account, so on and so forth.
So why do we need a payment bank?
And what happened from 22-23 onwards is that people started getting very wary of the fact that digital payments have also made digital frauds very frictionless. And they started worrying about their main bank account getting really corrupted by the notion that their account could get overnight ripped away with the concept of a fraud. And they started opening a second bank account for digital payments.
Which is where you come in?
And willy-nilly, Airtel Payment Bank became India's #1 choice for a safe second account where they could open it digitally in 3 minutes. And we pivoted the notion, and we were perhaps the first bank to really challenge the concept of having a no balance bank account at a fee, which was the best value, 200 rupee flat rate account, 50 rupees charged in a quarter, which if you think about it deeply is actually addressing squarely the notion of sustainability, because it really moves the concept of value towards an annuity business, recurring year on year, and really building scale and momentum as years go by. It's really demonstrated, therefore, in the payment bank model. And today the bank operates at a scale where you've got 100 million users generating 1 billion, as you mentioned, transactions of data points a month.
But, how do you see this business model itself evolving now that you've established yourself as this safe second account people want to have to avoid digital frauds? What next? I mean, is this going to get you through the next 10 years, the next 20 years?
We have to root really this in the concept of where India is today. And our view is that in any fintech market, you are in the early point of scale maturing to having mature market leaders where each category has 3 to 4 significantly strong market leaders. We see that in payments, where 90% of payments are happening outside banks, and you have 3 or 4 very strong payment players who are having large market shares. We believe that in India today, there will be 3 to 4 large digital banks where people operate their banks through their mobile phones. Airtel Payments Bank today now is actually the 3rd largest bank in mobile banking usage in the country. It's State Bank of India, HDFC Bank, and Airtel Payment Bank in terms of mobile banking users in the country today. And therefore, if India were to think itself as a developed economy, as mentioned by the Secretary, just like UK has Revolut, Brazil has Nubank, Airtel Payments Bank can certainly claim to have the right to pave the way towards the next 100 million users, really charting their destiny to having their bank on their mobile phone.
Well, that is wonderful. I mean, I did not know that you're now the 3rd largest in terms of mobile-only banks. But Santosh, let me quickly come to you on the role you're playing as a marketplace, connecting consumers with banks, NBFCs. What's the trend you're seeing there? Because a lot of banks, these traditional companies, are also building now their own digital marketplace. So how do you avoid just being a lead generator? How are you evolving to become a more sustainable business?
See, we've pivoted from being just a lead generator today. We are an end-to-end fulfillment company. And I think the role of a marketplace is much more than just bringing a lot of products on your platform and comparing and telling you what's the best interest rate and go for the lowest interest rate. That's not what our job is. I think our job is, more importantly, for the consumer, being able to match the right lender. For the consumer, being able to tell that, look, if you, for example, you're running a small business and you want to come, you need credit, right? And if you come to our platform and if we tell you that, look, there are various ways of getting access to credit. If you were able to mortgage your car, the rate of interest will be lower. We can build a process which is digital in nature, where you can take an inspection of your car digitally, upload that, we pass it on to the lender, and the lender is able to give you a loan of a higher value and at a lower interest rate. That assistance to a consumer will always be of value. And if you're able to take a consumer in, see what is the best way of serving a consumer, instead of looking at whether a customer wants a personal loan or a business loan or an auto loan. Instead of looking at a customer in that format, looking at a consumer as an individual and helping serve that need in the best possible manner, in the truest possible way. I think that model is of value, that model is a winning model, and that's the part that we are on. And I think for a model of that sort, where you're able to bring various products together on one platform from various institutions, you're able to match the right product, the right lender, the highest chance of approval, whether the customer, hitting multiple, bureau hits. And I would say that would have definitely affect the customer's bureau score. So without going through that pain, being able to serve a consumer in the simplest fashion, I think that's the model that we are at.
All right. Amrita, thank you for waiting by so patiently. When we talk about technology, a lot of the use about democratizing credit, bringing financial inclusion. But you also deal with this wealth tech space, which is quite interesting. And I wanted to understand, how are you using technology to make sure that wealth is also not just, or wealth creation is not limited to the top 5% of the population?
Yeah, so I think I have seen that shift happen only in the last few years. I've always been in the wealth management space, and I can tell you that earlier, access to certain investment options or a family office or data, analytics on portfolio were all restricted to the rich. But today, and that's actually one of IND Money's moat, because how we are positioned is a super money app to manage your personal finances, where you get 360-degree view of your investments, you get full detail analytics into your portfolio. And again, managing money is something that people like the idea of having money, but managing money is difficult, right? So that's where we've built a lot of AI-enabled Mind, which is our inside chatbot. We've got a lot of analytics on the platform, which basically helps a user. So I think, and again, when you talk about wealth inclusion, products which were only accessible to the rich, where they were compounding, like a US stock investment. Today, anyone can invest into US stocks within seconds, open a demat in the US, start buying fractional stocks, which is again how we've really gone ahead and done wealth inclusion. Net worth as a concept was only used by the very rich. So if you see, but today, everyone is talking about net worth. Everybody's talking about retirement early. On IND, you can track your net worth within seconds, and that is one feature which is loved by our user. So those are the things how I think we've brought about wealth inclusion.
All right. I've been told we're running out of time, but Sohini, I have to ask you this question because SBI, HDFC Bank, Airtel, these are household names. What do you think will really shift the needle in the next, say, 5 to 10 years for fintechs to really become a household name? Everybody knows UPI, but how many people know a Super Money or a Cred or a Navi? Or, what will it really take to make them household names in the next 5 to 10 years?
I think it's a journey. So I think there are lots of fintechs today which are, people would say UPI Karo. There was a time when people would also say stuff like Paytm Karo, right? So it's a journey. Because we are a country of 1.4 billion population, there's enough and more scope for many of these names, and not just the core payment apps, I think as they start giving more and more newer services and they differentiate themselves, because there is enough and more on UPI as a base for any fintech or service provider to decide which is the segment of population they want to go after, what is the product they want to go after. If someone wants to make UPI circle their core proposition and really go after that, I'm hoping each one of them, including Bheem, will be a household name. But it's a journey. It's not going to happen tomorrow morning.
Well, and a very important part of that journey and this infrastructure expansion is money going into the industry with zero MDR continuing. We regularly hear this grouse from players. Do you think, that will be an inhibiting factor?
I think what we need to focus on, Ritu, is that the UPI transaction and volume growth and of all the new features, that is going to continue to grow, and it is continuing to grow. We will continue to add not just new use cases, but I think there's been a lot of focus around security. There were discussion about the mule models. How do we enable credit discoverability? All of that, and whether it is wealth or insurance today, I think, while we were discussing earlier, there was this discussion about where is India spending, and we are talking about whether it is, credit companies, NBFCs enabling their collections, any of those use cases is going to continue to grow. So there are many ways of looking at where is the value being derived for the ecosystem. And I think the jury is still out on that. There is lots of interest in lots of new players who want to keep coming into the ecosystem. I think that is proof of the fact that there's a lot of opportunity here.
All right, on that optimistic note, ladies and gentlemen, thank you so much. There's a lot more we'd like to talk to you about, but we have to wrap this up. Thanks so much for candidly sharing your thoughts, and thank you all for being such a wonderful audience.